for joining us this afternoon. This is the Last Week in Mortgage Today. We're going to give it just a couple of minutes here. I see a bunch of people hopping onto the call today. So we're going to let people hop in and then we will get going in just a couple. So you're cold. I mean, you guys in Michigan, are you as cold as we are here, or maybe even colder right now? All right. Oh, PA. So sorry.
Oh yeah, I was gonna say, are you talking to us?
Oh,
Okay.
I wasn't sure if you were asking us.
I know, I
Yeah,
thought
no,
maybe you were talking to somebody else. No, it's cold. I'm freezing.
Yeah.
it's cold everywhere right now, though. We were talking earlier that we've talked to some people in St. Louis. It's like 5 degrees there. We have people that are in Mississippi. They've got snow. They're like,
Yeah.
Mississippi doesn't know what to do with snow,
Yeah,
so
like they're in a state of
staying in their house.
emergency because they got a dusting of snow.
Uncharted territory for those individuals. What probably is dangerous. They're not like some of us that are a little bit further north where we're maybe a little hardier and we have all the equipment and stuff
Right.
related to when you would get snow.
Right.
So sorry about that. We are very cold here. We have not been above zero since Thursday.
Yeah.
Here in the state of Minnesota. So at least not in my neck of the woods. So yeah, I think we'll get going though. It looks like we have a number of people on the line with us. Again, this is the Last Week in Mortgage Today. I am Faith Howard Mooney, the VP of Member Engagement at the Mortgage Collaborative. And I'm so lucky today. I have two really awesome people with me today. Marie Pietropalo, who is the EVP and COO, and Stan Brusoski, who is the EVP and National Sales Director, both of Holland Mortgage Advisors. Thanks so much for doing this with me today.
Thanks for
Glad to be
having
here.
us, Faith.
And I love seeing we're seeing some -21 in McHenry, Illinois. I love seeing all the chat in there. So as we start talking about mortgage topics, keep that coming. We want your engagement and we want to hear what you're feeling about things too. So Marie, I would love it just to kind of level set with the audience if you would just share a little bit about Holland.
Sure, I'm happy to. Hi, everybody. Again, Faith, thank you for having us today. It's kind of exciting for us. So I think most of you know us. I've met a lot of people at the conferences, but Holland Mortgage is an independent mortgage banker. We are headquartered in Pittsburgh, Pennsylvania. Established in 2010. I believe, and currently growing. We have, during this slower period, taken the liberty of increasing our licenses we've gone from Pennsylvania, Ohio, Florida, and I think last count, we were at 20 states approved. So we are growing our footprint as much as we can to lend more and help more people. And I think probably the most exciting news of late is that on December 6th of last year, we came together with two rather significant branches of another IMB to increase our lending capacity and our lending landscape. So that's probably the big news and the most exciting news for us to share today.
Yeah, you are not everybody, I would just say, in the environment that we're in currently has had the same trajectory that you have had. So I'd love to just talk a little bit about your growth and your expansion. So in 20 states, picked up, I mean, obviously you've grown, some of that growth is via a branch. You just mentioned that. But I would love to hear from either one of you about like what it's like and what the motivation was in kind of like taking advantage of the environment that we're in.
Yeah,
So
I'm sorry. Go ahead, Marie.
I was gonna say I'll share with Stan, but I was gonna
Sure.
part of it that I know that he and I collaborated on with Dave initially when the market took a little bit of a downturn is, let's take advantage of the slower time to get some projects done and make ourselves more valuable, right? So although maybe the operations was a little bit slower and maybe processing was a bit slower, the management team here was kind of on fire. We took advantage of the slower time. And one of the bigger projects that we tackled was getting our agency approval with both Fannie and Freddie. And it was a big undertaking. It was no small task. And it's something that we're super proud of. So that was one of the bigger things that we put on our desks and decided to get done, in an effort to make us more valuable, right? And to make us more profitable. Could sell to the agencies for sometimes much better pricing than the aggregators. So that was one of our big projects during the slower time. And I think we finally made the decision and we're able to onboard a new loan origination software. So we've taken advantage of, again, the slower volume, the slower season to onboard new software. We're training everyone. It's a work in progress, including me being trained. But those are two of the bigger projects we tackled during that slow season, in addition to deciding we wanted to grow. And I'll let Stan speak to that further.
Yeah, so as if that wasn't all enough.
I was going to say, those are not like just small projects.
No.
Those are huge organizational things that some people don't even do one of those in a year. So Stan, share with me. I'm sorry I interrupted you, but share with us, like, what else you've been up to.
Well, isn't that enough? I mean, really. No, I would just say that we kind of deliberately looked at the direction the market was going in, and you really almost feel like staying at the status quo wasn't really an option, right? We kind of felt like if we didn't make a change, we were probably going to have to reduce our workforce, which we see other people doing, right? Or we thought, the other option here is to scale and maybe find some opportunities with some people that are making that decision to downsize. There's going to be opportunities in that, right? And that's kind of in the DNA of the company. This company actually started as 3 small broker shops that came together in the financial crisis right after 2008, and they did that because they wanted to pool their resources as a protection for the company, and that kind of was a thing that maybe gave them some opportunity in the 2010s and whatnot. And then so here we find ourselves in a spot where I don't know if it's correct to say that we're in an industry in crisis, but I think that's not a totally unfair description of where we are, with what has happened with the markets. And so, we've kind of made the same choice that maybe the best thing for us to do is to bring on more resources and more talent, and that should position us. We all expect the market to come back. We're hoping it comes back sooner than later, but we feel as though we've managed the company in a way financially that allows us to make decisions like this, where other people are making decisions maybe out of because they have to make certain decisions. We feel like we've got some options, and so we're really excited and really gratified to be able to do the growth that we've done. I will also say, incidentally, and this is a recent update, right? But we've also rebranded in the midst of all of this. So
Right.
We're really not operating as Holland Mortgage Advisors anymore. We've changed to HMA Mortgage. So just one more thing that goes along with this whole suite of changes that we've been doing.
I am making note of that because I did see that really nice fresh branding come out.
New logo and everything. Yep.
Yeah.
I was going to say, I just
Our marketing department has been working super hard. They've been doing an amazing job.
Well, and as you're going, what a nice thing to do as you're expanding into these new markets is to be able to like have that new, clean, fresh start with everybody all kind of like starting at a same place. We always say here that like smart people take advantage of market turns. There's obviously a cycle to our business. For those of us that have been in for a long time, you see it every single time that like people that have their stuff together oftentimes come out on the other side of what could be a really, really bad situation in just a positioned in a much different spot. So kudos to you all for taking on everything that you're done. It sounds exhausting, to be honest with you. Exhausting, but a good path to be on, definitely.
Exhausting, but gratifying at the same time.
Absolutely, which is how all good things are, I think. Yeah. Honestly, you sink yourself into them. With that said, I saw something this week, and it was very targeted towards loan officers. And it was talking about the variety of experiences that loan officers have had this past year, and maybe even the year prior to that, a little bit trending into that. And it talked about that there's really kind of, several different camps that you could land in for last year. And I think I already know which camp your folks probably land in, but it talked about one camp that was just, their mantra was kind of like, get it over with. 2023, it's in it's in the bag, get it over with. We don't want any more of this. And then the second camp was one that was more about, I'm going to take advantage of this time that we have where it's maybe not as busy, and I'm going to hone my communication skills, and I'm going to become an educator versus a salesperson. And I'm going to make sure that I take care of my network that I have in my back pocket and make sure that I'm still in contact with them and know what's going on with them. And so I would love to hear from you, Stan, since that's kind of, your side of the company and what you're super engaged in, kind of like what you've heard from your originators related to 2023 going into 2024 and where their focus is related to all of those things and products and maybe re-engineering their plans.
So I would say, first of all, this has been a really demanding year for originators, as for everybody in our industry. But it's really fair to say that those two camps are fluid, and just because you're in one camp today doesn't mean that you might not be in the other one tomorrow, right? So what I've seen is a lot of what we've had to do is just be there to reassure our loan officers that, number one, that the company is strong, which is potentially a concern, right? You've got a solid foundation here. We're looking to bolster your resources, bring you more product, more technology, right? So on our side of things, one of the ways that we helped to sort of nudge our loan officers into that, sort of positive mindset camp was to really try to invest in things that would make them better, right? Tools that they could use to be better and more competitive. I think in a large measure, a lot of people in our industry, maybe myself included, have seen this as a war of attrition, right? Where it's like, we all know that our most of us, our income is down from where it was last, 2 years ago or what have you. But we all know, you mentioned the business cycle. I've been in this, I got in 99. So I've been through some business cycles, right? They call it a cycle because it's cyclical. It will come back, right? The problem is that it's hard to see that when you're at the bottom of the trough, when you're, still in the teeth of it. So, it's been a hard couple of years, right? So, and a lot, I think before the call we were talking, this isn't an official statistic, but it's estimated that as many as, up to 40% of licensees last year did not renew their license going into 2024. And that, I think, is telling, right? In one sense, it's also reassuring, though, for those of us who have been in this war of attrition, that it's like, we're finding ourselves still standing here, whereas maybe some of our competition maybe is not, right? So it's a matter of getting through it until the market comes back to us, and I think we're all really aware of that.
Yeah, I was going to say, as we move out of the cycle too, if truly 40% is missing, that's a big opportunity for the people that have remained in the business for sure, because as the cycle changes and business does come back more than it is today, there's lesser people that business is spread around with. And we all know if people are serious about staying in, they're not going to want to take their licensing stuff over again. So they're going to stay in and stay in play, because nobody exits. And then truly, if you have a passion for it, you typically wouldn't exit and give up.
If it's in your blood, it's in your blood.
It's a good point, though. There is a barrier to entry, or as an originator, and so once you're in, you might as well stay in, right? You're in for a penny, you're in for a pound, as we like to say.
And your referral sources all are out there and still engaged with you regardless.
Correct.
And if you leave and it's known that you've left, you may lose some of those opportunities as well. One of the things that, as you were talking, that I thought of, which I've heard from some people, is in the market that we're in right now. It used to be that LOs would go wherever the highest dollar was, right? It's like give me the most that you're going to give me. That's where I'm going to go. And it does appear like from people that we hear from, and maybe in your environment as well, and maybe this has really finally played out to your advantage, that loan officers aren't just looking at the dollars anymore. Culture, it appears, has become a bigger deal. So I would love if you would share if you found that in your conversations with the new people that you've had coming into your organization, on what are they looking for? Is it just dollars still, or is it something different?
I think the way that we kind of approach recruiting may be tailoring some of the conversations that we're having. So I can't say that this is what every loan officer in the world is looking for, right? We really have prided ourselves on being sort of a family environment, and I will tell a loan officer, you know, to their face, right? The worst thing that can happen as a sales manager for me is that you come to work here and then 6 months down the road, we have a conversation and you say, this was a really bad idea. I should never have done this, right? We want to make sure that we're bringing the right people in. So for us, again, it's like, okay, is it all about the dollar signs for the loan officers? Well, it's not all about the dollar signs for us either, right? So just because someone's a big producer, if they're not going to fit the culture, we don't really want that person coming in the door, right? So for us, recruiting is a long process in some cases. We tend to not really push the process. If it's going to work, we're going to have a conversation. We're an open book. Ask questions. We want you to know what you're getting into, right? So for us, we're looking for that person that wants to make a move and have a long-term home. And so, yeah, the money's obviously a part of that. It's one element, though, of a much more complicated conversation.
Yeah, of course. And so, culture, your family environment, those are probably some of the things that, attracts people to you if they're like-minded individuals. That's how we feel about our TMC family as well, kind of ironically.
I think there's a lot of truth in that. Yeah.
Yeah, it's like what you just said is like exactly how I talk to other other lenders who possibly want to come into our organization. It's like, look, this is what we do. This is how we do it. And this is what's really important to us. Does this match what you're looking for and what you want to do? And if not, it's like,
okay.
maybe it's not a good fit. Right. Exactly. I think that's so healthy to be in that environment, and much healthier in the environment that I think that we had before, where people were chasing dollars, and it's like, I'm going to go where I can get the most, and it's like that just doesn't seem like stability. Seems like so much more of a big factor right now than it ever has before, stability and culture. So and that's something that HMA Mortgage has always had in part of your process. One of the big impacts, which I realize that based on the markets that you support, you probably haven't run into a lot lately, but feel like you probably are going to hear more about it, is there are some big impacts going on in our industry right now related to homeowners insurance. And so one of the things that I kind of dug into a little bit prior to this week was some of the larger insurance agencies. We all know that there have been natural disasters on the coasts and things like that have really impacted the cost of things. Well, now it's coming down to the point where it's severely impacting the consumers of those, with people pulling out. So the article that I read, Allstate had threatened to stop renewing auto insurance for customers in 3 states because their increased demands for higher insurance premiums had not been approved by the state regulators in those 3 states. So they were trying to leverage the fact that they couldn't get their insurance rates increased and saying that, well, fine, then we're not going to renew people's auto insurance policies in those same states. And the states kind of came back with your choice, and did not agree to some of those increases. The increases were in California specifically. Allstate was asking for a 40% increase in homeowners insurance. And a 40% increase is substantial in a market where people are where affordability, I guess I would say,
Right.
is an issue already, and then you're going to see this big increase. And they're not the only ones, so I don't want to, be negative towards Allstate, Farmers, State Farm, other large national providers have been involved in these conversations as well. So, something that used to be very routine expense for people has now become a strain on budgets. And I would imagine, which I know you may not have experienced this yet, also has become a strain on qualifying for people that already are struggling to qualify. So if anyone in the chat has had experience with this and seen this in your market, please share some information with us. Of course, a lot of it is related to climate change. So places that you may see it, Florida. I mean, I think that was one of your recent expansion states.
Yep, absolutely.
In Florida. So I would love to hear, have you heard anything about this yet in your new markets?
I think we've heard grumblings, right? Where people are bringing things up like, look, I just got the homeowners quote. Now it's making us, get a refer. So, there's been grumblings here and there, nothing major as of yet. But I think part of what Stan alluded to when he was talking about loan officer recruitment is, it goes both ways. And one of the things that we look for, in addition to all the things that he named is, we're looking for experienced loan officers, right? Loan officers who have knowledge in their field, right? Loan officers who have knowledge about their specific lending territory. So part of the expectation there is the loan officers in those impacted states, they're going to know about this. So when they're out qualifying their clients, they're going to know, hey, look, I can't qualify you on a homeowner's insurance premium of $1,200 for this size house. That's just not going to work. We probably have to double that, right? So we do rely on them a lot in that area or that arena to qualify their borrowers appropriately. That's part of the experience they bring to us, in that state. I think the other thing that we've been doing and so far has been working, but again, we're still broaching those coastal states is, part of what we do is we try to get a loan clear to close 3 to 5 business days ahead of time. And part of that process is I've got a deck page with the appropriate coverage and an invoice for payment, right? And that's a well in advance of our closing date. We also tutor them along the way. Look, we've got to get your insurance. We've got to get a deck page. We've got to get your invoice. We have to qualify you on this. So all through the process, we are nudging. The processor's nudging. The loan partner assistant's nudging. The closer is nudging. So we're reminding them through the process, we have to get this. This impacts you. Can you get us something? So we're trying to hit it head on, if you will. And there's reminders all along the process.
I think
I'm sure
Marie,
it's going to become more challenging.
I think Marie makes a really good point though, as well, that it's kind of our business model that we're a referral based company. So, she makes the point that the loan officers, they're in the markets where they're originating, almost exclusively. So this isn't like a call center or anything like that, right? The loan officers are right there in the market, right next to the referral partners and right next to the borrowers. So of course they've got expertise, because whatever those pain points are that the borrowers are feeling, the loan officers themselves are feeling the same pain points.
It's not the first time they've heard it. They probably hear it right now on almost every single transaction. If they're in one of those very targeted markets that's supported. An advantage for a retail loan officer, there's your advantage of a retail loan officer versus a consumer direct person.
Absolutely.
In those markets for sure, as they are boots on the ground, involved in all of those things, and probably living some of those things themselves in their personal lives, to
There's
be
no
honest.
doubt about it. Yep.
Sure.
When it hits personally too, it always registers a little bit more, right? So it's like probably sticks with them in those markets that they're in. One of the things that I have heard from a couple of people internally, that people in some of those markets where maybe that's their only market that they support, they're talking about having that insurance binder much earlier in the process, and possibly even collecting associated with that during that period of time up front. So there are some things that have started to happen. We'll look forward to hearing from you guys as you get further entrenched in those markets and gaining expertise from you on kind of like what you're hearing from your teams in those markets. Ran across some current stats this week too as well. related to kind of like what it takes to buy a home these days. And so always interesting to me as we've seen some of those things move in an upward trajectory. Median sales price for a house in the US, $413,874. I don't know what the impact to PA has been, so share with me. Have you seen prices in PA where you've been forever? Have you seen them really do a big escalation? Or are you one of the places, like we have a lot of people in our company in the Cleveland area where,
Right.
yeah, it's went up, but it hasn't been quite as dramatic as in other places. So share with me in Pennsylvania, what you see going on.
Yeah, so our footprint in Pennsylvania is mostly Western Pennsylvania. So this may not be, entirely characteristic of the eastern side of the state. It's
Sure.
just, where our headquarters is located, right? So and it's interesting, you had mentioned the median home price. Marie and I were talking about this prior to the call. In 2007, and I'm looking at this right here, median price of a new home in the United States was $246,900 in 2007, before the financial crisis. Right?
Yeah.
And that was back at a time when everyone was talking about prices escalating out of control. So what does that mean for affordability, right? So, I mean, it's a huge problem in our industry. It's a huge problem, culturally for us, right? Western Pennsylvania has definitely seen housing values go up. But I think that there's a lot about Pittsburgh that is similar to Cleveland in a lot of ways, so we're seeing appreciation, but it's not rampant. I think that there are certain pockets, kind of hot markets within the region that are really exploding in value. But, by and large, we've seen a very steady increase in home values, but not something outrageous like you would find in one of maybe one of the resort areas over COVID or something like that.
Right, exactly. What was most shocking to me about that, and just kind of speaks to where, where home affordability is right now, is in potential buyers in order to buy that property, the salary is $114,627. And it's like, I just looked at that and I thought how many people, especially maybe in our service industries where, service industries are paying more than they ever have before, right? Because they still, at least in where I live, they're still having a challenge in finding people for those jobs. It's like they don't even have, if you're in one of those median price areas with a house that size, what opportunity do you have to purchase a home? That number is like
staggering.
$100,000. I get it based on where home prices is, but $114,000 to buy a house in that median sales price was just kind of shocking,
right?
To me to see.
And that's a combination of factors that are playing into that. Obviously, interest rates, home values, the supply problem is not helping anything with home values coming down, right? If anything, they're continuing to escalate, maybe not like they were, but and then, all of the things we've discussed about insurance rates.
Yeah.
It's like a perfect storm.
It's a perfect,
right?
it's a perfect storm.
So the inflation environment, food is more expensive, like it's across the board. It's
like, what do I choose? Do I choose a house or do I choose food for my table?
Right.
Exactly. Well, and then on top of that, I think I talked about it last week on this show. Credit card debt has also escalated, which of course comes into impact when you're trying to qualify, but it's credit card debt in a lot of instances has been impacted because people are trying to survive because of all of those goods that they normally buy.
So take that one step further too, Faith, right? Because it's like not only are the credit card balances higher, but the rates on the credit cards are higher as well, right?
Yeah. Yep. Exactly. It just becomes this vicious cycle that I feel like we're kind of living in right now, that hopefully it's a cycle as well. So hopefully we are at a point where soon for all of us
shake out.
Yeah, we break out of that cycle and it becomes something that maybe is, I'm not saying normal or going back to what it was before, because I think we all, have the realization of that is gone, that's history, and that's not going to happen, but maybe something more normalized.
Right.
for people to be able to do that. I can't even believe it. I always say this at the end. We're at the end of our time together today. It
Wow.
all goes
That went
by
quick.
Went by quickly.
fast. And I'm just thrilled that both of you would do this with me. I know we've talked about it many times before. I'm so happy that it finally happened.
Me too.
Yeah.
It was
I
fun.
have to do it again, Marie. I'm going to get you to.
Absolutely, it was fun.
I appreciate both of you. Holland has been in our TMC family. I think because of all the things you spoke about culturally, and those things are very similar to us for a very long period of
Yeah.
time.
You
And
guys have been a tremendous partner for us. So
Right.
it's been really, really, it's been a worthwhile relationship.
mutually
As far as we're concerned.
beneficial.
Yep.
Mutually beneficial relationship for sure. Dave and his crew have always had, such strong people there that we appreciate, and we love having you in our network, in our TMC family, and with us. So thank you both very much for doing this with me today.
It's been an
Thank you,
honor. Thank
Faith.
you very much for inviting us.
And everyone who's on this call, come back and join us next week at the same time. We always look forward to having you and having your commentary in the chat. Thanks, Stan and Marie.
Thanks.
See ya.